Hello again, everyone. It's Vince Ford from TradingWinds.com, and this is our update for October 17th, 2021. Let's take a quick look at how things finished off on Friday. We did have another nice update on Friday. The Dow up 387 points. More importantly, if we look at this, not only did we overcome this upper trend line here on Thursday, but we took out that prior high on Friday. So it certainly looks like we are off and running to fresh new highs on the industrials. Anyway, the S&P 500, similar, broke above that upper trend line. And if you look at this prior high, yes, we are there, and we did overcome that on Friday. So bullish move on both the Dow and the S&P 500. The Nasdaq, we did close above that upper trend line as well. A significant update there as well, and that looks pretty good. The Russell, however, was above that upper trend line intraday, but pulled back and closed basically at the low of the day and back inside that wedge. So we'll have to be a little more patient there and wait for a proper breakout. If we look at crude oil, it continues to run, not slowing down at all. This is a nice strong trend. And no reason why this can't continue. If we look at gold, we had a couple of nice days in the middle of the week, and then on Friday, we pretty much gave it all back. Now, the question here is, will we hold that 20-period moving average? That's what we'll find out early this week. The yield on the 10-year note sits at 1.574. If we look at bonds and look at TLT, the ETF for the 20-year Treasury, looking like a short here. So far being rejected at that 20, and could come back to not only retest the 141 level, but potentially 135 after that. Now, if we look at the ETFs for the different sectors here, starting with energy, of course, continues to go higher. Crude and the whole energy sector, very, very bullish. You look at financials, and we have a fresh new high, a nice breakout here on Friday above those prior highs. Looks fantastic. You look at technology, and we are looking a lot like the Nasdaq, obviously, where if you take your trend line here across these highs, we have cleared that and now should be moving higher. Other thing that could affect this is we have earnings coming up. Obviously, we're in the middle or at the early stages of this quarter's earnings season, and we have a couple of big names in the Nasdaq, the tech sector. We have Netflix coming up on Tuesday after market close. This will be an interesting one. We had a bearish engulfing pattern here on Friday. We've had a real nice run. Maybe we'll pull back a little on Monday, but Monday and Tuesday potentially coming back to support here. But once those numbers come out, who knows? We can see a gap either way. And then on Wednesday, Tesla will release. And look at Tesla move. We had talked about Tesla going to 900 from when we were here in the mid 700s. We're now at 843. So we're just about, I'd say, 2/3 of the way there. And so we can certainly hit 900. But of course, earnings can cause a gap either way. So we always have to be aware of that. If we go back to the different sectors, and we look at consumer staples here, we're also above that upper trend line if you draw that across. So looking better. Same with utilities. Looking better. Again, most of these, if you take and connect the prior highs, we are above those upper trend lines now. Of course, you obviously want to see follow through, and you've got to look at prior highs and areas of resistance overhead. But compared to what we've seen here over the last couple months, this is no doubt much more bullish behavior. Now, if you look at XLV, the healthcare sector, running into some resistance here, right at that downsloping 20. So we'll have to see if it gets rejected or breaks above. If it does break above, then it should follow suit with everything else. You look at consumer discretionaries, just an incredible week last week and off to fresh new highs. Real estate sector also back above that 20-period moving average, as is the industrial sector here, XLI. Remember that Dow chart looking better than any of those index charts. XLB materials also moving forward. Communications right at that downsloping 20 and could become a short here. And retail as well, as retail facing much more overhead resistance here if you look at all the activity here. So it's gonna take a lot of work for XRT to break above this area and move off to new highs. If it does, though, we'd be looking at a huge opportunity. As you know, we measure the length of this consolidation area, and if we break above here, we could be, looking forward to quite a run. Having said that, we get rejected here, and we could come all the way back down here. So there is a huge opportunity coming up in XRT. We just have to patiently wait for the exact trigger here. So, what else can we look at? If we look at, let's go back to the main list and look at crypto here. And here it is, Bitcoin. Over the weekend, pulling back, but boy, oh boy, the end of the week last week was strong. We blew through this one target we had talked about and got very close to those all-time highs, and we've pulled back a little here, but I would honestly expect us to come back, hold support, and then make our way off to new all-time highs. If you look at Ethereum, same similar pattern. We didn't quite get to that first target, but if you look at the tail of this candle, or the wick here, we're pretty much there. Pulling back now is very normal. Again, I expect to hold support, turn around, and make our way to new all-time highs. If we look ahead to the economic data points coming up this week on Monday, nothing major. Obviously you can see the list here, but none of the major ones that we usually look for, other than the federal budget balance maybe. On Tuesday, though, building permits, housing starts, the Red Book report, so some good ones there. A few different FOMC members speak as well. On Wednesday, we get the NBA mortgage apps number. We get crude oil inventories. This is going to play a bigger and bigger role here with the price of crude, now that it is elevated and is at levels where the impact on the overall economy could be significant. So need to pay more attention to crude oil inventories. And if you look at the rating here on investing.com, obviously it's a 3-star, meaning it is one of the more important data points we should look at here coming up this week. What else do we have? A beige book as well coming up on Wednesday. Thursday, of course, jobless claims, as we get every week. And we get existing home sales as well. And Friday, we get manufacturing PMI and the U.S. Baker Hughes rig count. So, again, overall, a bullish move this past week. We should see follow through. We have a couple of big earnings reports coming up this week as well. So, as always, let's take it one day at a time, but bias, I believe, is to the upside once again. That's about it for now. Enjoy the rest of your weekend, and we will see you on our next update.